All right, Luca. So I woke up late today. I saw this from my phone when I was still in bed, and I missed this little breakout here. It was clearly setting up gold, so we had this pullback here, VPOC here, pretty strong, very solid trend line, and then textbook. It's not a breakout technically, right? It's not even it's not going or anything, but it's that little pop. And um, again, if you're aggressive, if you could be, I mean, once you see this trend line here, if you saw any soaking here when it came down here, these candles, maybe, um, if you're able to catch this little bit, um, positioning for a potential breakout when it consolidates here very tight against the trend line, you could be perhaps trying to buy here off of 860, anticipating this is happening. But it can always fail. But you know, here breaks out, you get that exhaustion candle. Actually, this exhaustion candle is actually good also to maybe actually buy here the bottom of the range before this happens. So it could have captured this whole thing. Um, Potentially. But but the safest one here is that once it already happened and we get this exhaustion here off of the thing, when it kind of holds here above this VPOC, then we get this little pop, it's 10 points. Could have captured 20 points, but or 15 to 18 points, something like that. But well, like these 10 points you could have captured them. That's it. um, but then obviously, we got this huge move overnight. Momentum is here. Here it chops around, puts in another leg here, pulls back. And now it would be insane to chase it up here to force continuation or anything like that. We need to let it do what it's going to do. So we missed that trade. Um, Equities is looking. I mean, I have an opinion again. So market environment right now is obviously from a fundamental point of view, it is risk off. Obviously, all the worries with the EU tariffs and Greenland, that's really not a catalyst that hits until um, um, you know a week from now, 10 days from now, because we need to wait till February 1st. A lot can happen between now and then. The main issue right now, I think, is the situation with Japanese treasuries. So, and that's why we're seeing gold make those moves. Um, as you can see, it's not silver even. Silver didn't do the same thing. In this case, it's gold. It's the pure risk off move, which is always gold. Silver is moving for other reasons, but gold is the king when it comes to risk off and flight to safety. So that's why we're seeing gold go like that. And um, regarding the what do you call this? The options, um, and the whole that stuff that we don't understand well. But I just take the key message, and the key message is the people that I follow have been saying that we're still in a long gamma environment where the dealers um, are uh, whatever they're hedging and their positions are in such way, which again I do not understand, but I don't care, that they are aggressive on the bids and they are soaking it. So there's no momentum. This is important because it goes back also. I didn't share my review of this day. We had this down day here the other day. I can't remember when it was. Um, but we had this down day here that I think we were trading this together. And I kept saying I think I was trading this consolidation here, and then it was coming here. Basically, the lows of the pre-market here was basically 25,800, and then after taking the 25,800, after actually taking this area here, but specifically when it takes out the 28,800s from the pre-market, we get just like we sell off. But the way in which we sell off, this is a 1 minute chart, and on a 1 minute, it's very clear. But I don't think the 5 second goes that back, all that way back. So I don't know if I'll be able to show that. But where are we? Yeah, no, it's not possible. Okay, so but that was kind of similar to this that we had yesterday. And the point that I want to make is that even though this looks like momentum, it on the tape, it wasn't momentum. It was we were in that same environment, that sort of like long gamma environment where these, when it's trading in a range, it's very clear that every time there's a dip into the bottom of the range or a pop into the top of the range, it gets immediately soaked. These are market makers. Well, these are they're just stepping in and soaking. They don't, right? Then when this thing breaks, when it breaks this trend, this consolidation, maybe you have this basically this pattern here. It doesn't break to the upside. It breaks below that trend line. Um, and it's gonna obviously we have this is the this wick here is the bottom of the opening range, right? So that's the low of the day of the regular trading hours day. We take out that low and we get momentum, so you see here. But then, it kind of popped back up into that low and then initiated this. So this was the important low, regular trading hours. This is a low from we call it the initial balance, or it's basically the pre-market before the cash open. So when it breaks below, we didn't really get momentum, even though it looks like momentum here because it's a 1 minute. On the 5 second, but more importantly on the tape, what I was noticing is that we were getting, I was looking at 800 because 800 is the whole number, and that's at the bottom of this range, and just an important level. I was waiting for like a flush into the low 800s, and it never happened. Every time we got a little flush, a 10-point flush or whatever, like a little momentum, and then we would get that soaking action with that volume candle. Um, they would never let it run. Even when it came down into 800 here, bam, they soaked it up, soaked it up, soaked it up. All of these, look at these wicks into 800. Wicks into 800, bam, soaks up, pops up again into the 812, 816, 15 into the teens. Here it breaks below 800 and still look at this wick up into the 805. Even when it flushes into 780s, it's a wick, which means soaked up and pops again into the 80s and so forth. There's always it never we never really got a flush with a lot of momentum that goes 20, 30 points after it takes out a key level, which is what we see in a short gamma environment where there's there's just real momentum, and we see these big flushes, big candles, and we see 20, 30, sometimes like even 50, boom, like 50, points and just 1, 2 candles. None of that is happening. This was controlled. And if you're trading this and you're trying to buy the breakout to the downside, you're hitting bottoms and oh, it's going to break here, it's going to break here, you would have gotten chopped up every single time. You would have been stopped out, stopped out, stopped out, and at this point, account blown, blow your account. Even though you're right in direction, and this thing, if you look at it zoomed out, it's like, wow, this is its capitulation. But on the tape, it wasn't. It was very difficult to trade. And the only trades that were safe were actually buying the dips, because every time there was a dip, it got soaked and it will pop and it will pop and it will pop. So why am I going to this? Because that's the environment that we're in right now, and that's how it felt yesterday. So and this is something that I forgot to bring. I wanted to bring on. I think I'm not even sure if I did a review, I sent it or anything, but this is something that I even on my own review I forgot to touch on, and it's important. And it's like when we know that we're in a short gap environment, in a long gap environment, and that we know that that there's chop and it's difficult. We we always kind of need to zoom out and understand what's happening, context, and zoom out into a higher time frame and understand that even though the tape is like that, we are actually getting here a sell-off. And it's important, something that I fail to do, and this is when I'm bringing it up, is that if I had kept a 1 minute chart up and I had just put on a position, I guess maybe into one of these pops, after one of these pops, and then just go, but this is a 10 EMA, and just go by a 10 EMA and let that 1 minute, that 1 minute chart and the 10 EMA rule, period, and hold that position until that 10 EMA is tested and then broken, and that's it. It would have been a home run trade. Would have captured here, getting here in the low 800s, and potentially all the way down into the low 700s. Was a 100-point move. That first one. Then this becomes a lot more difficult and choppy, but so that's something to think about. But again, I bring it up because yesterday NQ felt it was pretty much the same. It's it was here. So this is not pretty much the same, because that one was literally selling off. Here we don't have a sell-off yet, but the point is kind of similar, and it's like we are in a risk-off environment. Clearly, no, right? We gapped here overnight after the Greenland escalation thing and all that. We've stayed here down here. It's been chopped, but here, like, they're not letting it. This thing is screaming the fundamentals and everything is screaming risk off. Yes, you can see it in the moving gold. This thing is dying to just, capitulate and tank, and um, just the dealers have been just propping it up, soaking every single bit, every single attempt to flush. They just keep propping it up, and then it traps, and then it pops, and then it traps again, and it pops. Doesn't mean this is not bullish. It's not strong. It's not strong. Didn't fill this gap. Didn't even get up to here. But they're not letting it. And even and this is where you got stopped out, and we were on a call, and you were like, because it was breaking this this trend line here, and you thought, I think, and then we had this range here. I can't remember. Maybe it was this range up here. I can't remember. You were like hitting the bottom, thinking that this was ready to go, and it's not gonna go. It's not going. It's not going because these people are aggressive on the bid, and they will, anybody that's trying to short the bottom of that range, thinking, everybody that's trying to buy a breakout to the downside in this case, is going to be trapped, and it's going to be stopped out, because that's how this thing is trading. And then once we do break here the bottoms, it's the same. Doesn't look the same because it's not quite. It was not as a steep sell-off of the other one, but it was the same sort of price action. This is all chop, but this is all them on the bid. them on the bid constantly. So the way I traded this yesterday, I was up. I can't even remember. I think I was up. I did a good trade on silver, actually. We'll go that into a second. And then I did, and might have been this one, and I have it marked. I can't remember. I have to go to the video, but I'm not going to do that now. Um, it might have been this, this bounce here, where it was a good trade because we have, again, this trend here. It broke, and then I just waited, and then I saw the bottom. It's not very clear here with the volume candles, but on the tape it was. And then I wrote it, and I have this on the journal, and I think I took it off too early because I got this pop here, and maybe took off most of it here and the rest here instead of letting this go up here. Okay. Um, but it was mostly off of the tape. You don't see it here very clear, but it must have been like this candle here, I guess. But in the tape, it was like, this is it. This is the bottom. And this is basically a capitulation long. In context, it's not a real capitulation, but on a very low time frame, we're trading here on a tight range. We finally get that move down. Um, Difficult to join trend to the downside because of the reasons that we were just talking about. But then when we got that soaking action here, it was a no-brainer because basically you have the tailwinds are on, you know, the like the yeah, tailwinds, I guess you call it, the, the pressure is to the upside. So, once we get that burst, that volume, sort of thing here, bam, you see how this grinds on the way down, and then on the way up, bam, it's just momentum. It's just like clean, boom, 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 right? Like this one as well. So, so I made that trade, and I think I pretty much hit um, my daily, target, the base hit. And then I did something stupid, and I think I traded something random somewhere around here, and I lost everything. Not everything, but almost everything. Almost everything. I was really upset. And it actually probably during this consolidation here. That's not real consolidation because it was actually trending down. Um, so I did something really stupid, somewhere around here. And this thing that I'm talking about, where the tape is so clearly it's so safe to fade tops and bottoms, that I lost everything, and I just, in a matter of 5 minutes, I just went ahead and be okay. I'm just gonna go and fuck it. I'm just gonna go and buy, every single dip here, every single dip, bam, 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 and in 5 minutes I made it all back because it's that easy when it's like predictable. It's that easy when you know that that the market makers are super aggressive on the bid and the offer, and it's just back and forth. Some of the candles are more like this one, and this is probably one of the ones I took. Bam. And then, instantly 10 points. And then the next one, another 10 points. The next one, another 10 points. And they made it all back because it's so predictable. And while I was doing that, I was thinking, this is a spot where Luca would blow up his account because because look at the chart. The chart is screaming breakout. It's like, you know, breaks here and then makes lower, and then it's pushing lower, and then, at you and in the end it does break out, but it never does. Even when it does, it's like it keeps every single flush keeps being bought up. We don't see real momentum up until here, I guess, just for a brief moment. You would have blown up immediately here, trying to buy this breakout. I don't know, theoretically, right? You probably would have been like, okay, look, here's a VPOC here. This is the bottom of the range. We're at the bottom range. Oh, it's about to break out. and then you get screwed because this is how it's trading. So, um, and in the end, look at it. You zoom out, and it was a fucking, the 1 minute, we're up here, huge sell off, but not as easy as it looks. It was pure chop. So, um, I guess I'm um, thinking about these things because I saw your video earlier, a couple of hours ago, and it made me think. Well, we'll go to your video in a minute. So really quick, let me just remember what I did in silver because in silver it was a good trade, and I guess it was this one. um, this was a trade in silver, and let's go to the 5 second, and it was again we've got basically um, not quite here. I mean, we don't have like a solid consolidation there or anything, but it does kind of like break out of this like trend, and there's momentum. Basically, there's momentum to the downside. And I actually caught this one. I don't have it marked here, but I caught one of these and I nailed it and I got out quickly. And then it basically um, chops around here and then comes back down, takes out the low here, and then the real capitulation is this candle here, and that's the one that I that that basically dictated a mean reversion trade. I say mean reversion kind of loosely because we don't have a real um, tight range with a solid VPOC here, and that's what we need so this has somewhere to go back to. So, and that's probably why we didn't actually get up there until it kind of chopped around to get up there. But so this is something that is kind of important, and it's just not it's not buying or selling all volume candles. We have to zoom out and look at structure and look at in this case, this one was important because it indicates this is a momentum move to the downside. It's kind of a capitulation, moving away from previous consolidation, and then we're getting exhaustion down here. It's reasonable to expect this to be a mean reversion trade, a bigger trade. So it gives us not just conviction to get in with size here, but also conviction to expect a larger move. And this one I botched it again, by the way. I think I took it off too soon. And the yellow rectangle, I drew it thinking that this was going to be target. It was going to head all the way up there. It didn't. Like a dead. I mean, it did, but much later. Um, um, but this also points to remember that markets are fractal, that on a higher time frame, this exhaustion here is kind of like the exhaustion to a trend that then traps and then puts up the next leg and then exhausts, and then we get the counter trend. And if we flip it, we do this all the time on the long side, or this time is on the short side, but that's kind of like the pattern that I was looking at here. And obviously, these candles, even though there was a lot of volume here, they were not super, there were bigger volume candles before. So there was a lot of volume traded here, and you can see it throughout. Um, these are kind of isolated candles. These are all like, this is a cluster of a lot of volume here, but still, we don't get that one standout volume candle until this. So, you know, um, anyways, that's a trade I did in silver. Um, but then going to your video, I kind of want to pull it up really quick. And let's see. And because I caught a couple of things there that are important. Okay, okay. Seems like I cannot play it. Let's play it on a separate window. So let's mute it. So okay, I can't remember. I had notes actually. I took them when I was half asleep. But the first thing is actually let me pull up the notes. Um, um, oh, first of all, you asked about volume point of control and how to let me let's just go over that really quick. Um, I have like my volume point of control. I don't know if you see these lines here. But these lines, I'm always zooming in and out of charts. Maybe you don't like that. I know a lot of people don't like that, but to me, to me, it's an advantage. So I'm always, yes, the volume point of control, the volume profile changes, and that's good. So you kind of like factor out some parts of the chart, you factor them in, and then you see how the volume profile changes, and it gives you an idea. But these lines that you see here that are kind of like they make the chart noisy, but they're useful for what you just asked. And it's like um, because they keep, and I can't remember how I said it to how much time. So I don't know how far back they keep, but this is basically they keep previous levels so that you can see them. So for example, this was an important volume profile area level here. If you factor this part of the chart, if you move forward and you're not factoring that part of the chart again, that area probably disappears, or in this case, it doesn't quite disappear because it's still relevant. But other areas, for example, that would disappear, um, what that thing does is that if they don't show, if those areas disappear from the chart, then you get the line basically to indicate, hey, this was a previous point of control. It's not with every area, but with the strongest point of control. So it's going to tell you. Um, and I don't know. I think that might help. I'm not sure, but that's I think that's the purpose of that line. I always have it there, and it helps me. So I don't even know exactly how it works. I just know that, that I use it, but I don't know the parameters, specific parameters. Okay. Let's go back to your video. Um, okay. Geez, I can't remember now. Whatever. But the point is, I think you were buying, you're talking about, I guess the main thing is this. You're kind of trying to you're like, okay, now this is the way going forward, buying volume candles, fading volume candles. And I guess the important point is that, well, this is what's working right now, and that could change today or tomorrow, because if we get one of those days where momentum starts clicking in, and where maybe it turns into a short gamma environment, and then the market makers are aggressive on the bids or the ask, then we get real momentum, we get clean moves, and then this stops working. So then then you need to shift, kind of like flip a switch and go back to breakout mode. And that's kind of like a delicate, like a nuanced thing that we have to get it right. Because if you're training the wrong mode, um, if we're in a market environment where one style favors the other and you pick the wrong style, then you're screwed. Um, I'm not. I'm sorry. I can't go all through all your video because I had a bunch of thoughts, but now I would have to go through the video again. Um, so whatever. We can't do that. The one thing I'm going to pick, the one important thing that I did um, okay, let's see, maybe see if we can find it. I should have timestamped these. You made a trade that needs to be pointed out because this thing is come back and bite you later on. So where was it? Um, it was a trade that you felt pretty good about, and it was a winning trade. Um, maybe this one. Yeah, I think it was this one. Sorry. And it's okay, so you are here again. We're in an environment where this is working. You have a range here of consolidation that you found. You've been scalping this thing, fading the tops, buying the bottoms as well. You faded the top here. And um, you see this when it comes to the bottom of the range, it gives you this volume exhaustion candle here. And what you did is it bounced a little bit and you added to a position here and it ended up breaking out of that range and you made a really good trade. And then you took it all off into this our other larger volume exhaustion candle here. And I could hear in your voice that you were pretty excited about this trade because it worked. But the problem is, what if it had not worked? And at the beginning of your video, you did mention something like, I have this problem where I fail to take profits when I have to, and then I get screwed. And this would have been one of those situations, only that you got lucky and it wasn't. Because what was the reason? How did you know that this was going to break this range to the downside? How did you know it was going to happen? I don't see any structure here, any technical pattern or any tell that would tell me, oh, I know that this is going to be the one where it breaks to the downside, especially if at the bottom of the range it gives you this exhaustion candle. Maybe it took it out by a little bit here, and that's not enough. You got lucky that this thing didn't just swipe up and go back up in this direction. This is not a trade with edge. And the problem with this trade is that because it worked and it was a winning trade, in fact, I believe it was your best trade during the session. Um, what happens is that you get rewarded for a trade that was not a good trade. And in your brain, you get a dopamine hit. We all do. That every time this happens to us, whether it's a good trade or not, when we get a winning trade, we get a reinforcement in our brain. This thing is going to come back and haunt you because now you're going to have 10 trades in a row where it's not going to work, and you're going to go for that because your brain remembers this feeling, and it means that you have another two or three blown up accounts in your future. So you need to address this. It's you, dude. You have no idea how important it is that you address this. You need to kind of like reverse engineer this shit and internalize that this is not a good trade because it's not a good trade. If we are in an environment where you know that the tops and the bottoms of the ranges of any little consolidation that you're fading them because that's what's working, well, you should have faded this one, especially this one, because you have more volume there, which is exactly what happened here. For example, we get this pop that I remember you saying that it's kind of scary. It's not scary at all. This is like bam, going back up, testing top of the range, huge volume exhaustion. And what happens? If you fade that, it's a huge winner. Now, if you had been like, oh, this thing is now, you had, anticipated, oh, this thing is now taking out the top of the range and I'm going to add here for the breakout. Well, you have been screwed. Well, that's exactly what you did here. So that's not working right now. You have to be fading volume. If you're fading volume, why did you switch here? You switched here, you got lucky, and it worked. Um, there is nothing here in this chart that's telling me, I don't know if we zoom out, if we see any structure, There's nothing here in this chart that's telling me that this is going to break the bottom of this range. Nothing. Nothing. And this also is also a reminder that even though on the micro level we're doing this, we have to we have to have that higher time frame chart up there for reference to know where we are within a specific pattern or within a specific setup, whatever it is. And there may be a point, for example, where this could be anticipated if it's within a setup or a technical pattern that's telling you, okay, this is about to break trend here, whatever. And still, I wouldn't be buying this breakout here or adding to move to the downside, because in this market is very unpredictable, like we were talking about in these examples that I gave in NQ, where even when you have a strong technical setup and it looks like it's a just a guaranteed breakout, it just doesn't. So you got lucky here, but that's the danger. When you get lucky, yeah, you may, I don't know, it's not even real money, right? But you made like whatever in P&L. That's just gonna that pales in comparison to the amount of money that this is gonna make you lose. It's gonna come back and bite you if you don't address it. Very important. If you know something that I don't know, or I'm missing something here, then you let me know. Um, but this is something that I had to point out because it's super dangerous, and that's basically it. That's the most important thing that I wanted to um, to address. And the other thing, oh, that then you switch to practice account, and then you started doing things. Oh, this is just a practice account, so let me see if this works out, and you start doing random stuff. My suggestion is don't do that. Practice account needs to be treated exactly as if you were trading your real account, because then it doesn't, then you start doing random stuff, and it's kind of like subconsciously, again, same thing. Your brain gets wired in a weird way. You get some dopamine hit from something that works, that was random, whatever, and then you go without noticing and you start trying that on your real account and you blow up. Practice account should have absolutely no difference with the real account. The real account is not even a real account. That's something that when we move on to live account, it's the same thing. During these evals, you shouldn't be trying anything that you want to be trying with a live account. That's like every penny counts because it's your hard-earned money, whatever. Should be the same thing. So that's also something that you have to be careful with. You can't be trading a practice account, trying stuff on a practice account as if it doesn't matter. It should be traded exactly as if it were a real account. Unless it's just a simulator where there's just no P&L attached to it whatsoever. Anyways, this video is going to be really long. I'm sorry, but that's it.